All right, this is the God's Invest episode 1, our
All right.
unofficial restarting of the series, where we essentially practice economics, and we
What's
all
going on?
invest together. We started our investment account through WeBull and M1 actually over 4 years ago, almost 5 years ago, and we were rolling with making investments as a group. We'll all invest the same amount, the same equal amount as the Three Kings, as we would love to affectionately be known as. But we're back and we're going to try to get the ball rolling once again. And niggas got lives that are way more intense than they were 5 years ago. So, no pressure on you fellers, and hopefully no pressure on me either. But we'll contribute what we can and try to grow this account even more than we already have. We started out with probably three $30 investments from the three of us, I believe is what we started with, or $20, something like that. And we started ramping it up over time. So eventually I know we were doing like $60 every time with each of us, but we only did it like a few times. So our account is currently at almost $500 with about $30 sitting in settled cash from our dividends that's been paid out kind of like unconsciously over the last 5 years that we haven't even been looking at. Well, we've checked on it since then, because we doubled back and made some investments with some dividends and just let it sit again.
Before COVID, son.
It was
That
like
a long time ago.
It was like right before COVID. Yep. I just looked. The last episode that we did, we'd only got to episode 5. The last episode I think was January 22nd of 2020. About 2 weeks later, the world ended.
The world hiccuped.
So this is the blank slate that we're starting with. We're basically starting out with a $500 starting point, and we'll see how far we can grow this as a group. One of my co-hosts here, D, the Millionaire Money Minds guy there, he's actually much more investment investment oriented than I. He has a whole channel, which is why it's called Millionaire Money Minds, and he's even done videos of him returning bottles and making investments with the spare change that he found laying around his own home, stuff like that.
That's a hard video. That's great.
And that's the type of mindset that we have to be on, especially in this type of economy where we're like in some sort of like phantom recession or some shit. Like, but
you know what I think scared people away from investing? Because first off, they don't know where and how, but you think you got to have all this money to invest, and when they're doing these fractional shares, you don't.
The fractional share thing literally became a thing while we were
going through it, because that was an unheard of word.
It wasn't a thing.
And then all of a sudden it came to life.
Yeah. Right. And now you can invest with as little as $1 or less, technically, because if you get a dividend, like I've gotten a dividend where the dividend might be 22 cents and it just drips back into it. So like literally 22 cents, I made a purchase of 22 cents with my dividend. Man, you don't need a lot of money.
That's crazy when you think about it.
Another thing is that investing is so much more accessible, and it's kind of more common than it was 5-6 years ago among like what do they call them? What do they call investors that are like not playing with big money? There's a word for it. Is it boutique investors, or what is it called? It's like
retail investors is what they call it.
Retail investors. There you go.
Yep, retail investors. And this thing that we're doing is, like he said, we started out group economics type of deal, and the idea behind it was that we wanted to just sort of make sure that we put something in place to where we could eat off of. And because we did not have the necessarily starting capital to go into investment properties, because as we know, in the past 10 to 15 years, real estate has really been the mode of financial success that everybody has been pushing. But starting out, everybody doesn't necessarily have the capital that it takes in order to buy a bunch of real estate and start investing. And not only that, but real estate takes a hell of a lot of work, in some cases,
Yes,
depending on
sir.
depending on the property that you have, depending on the property that you're able to acquire. It comes with a certain sense of responsibility that you are beholden to as the owner. So in order to circumvent that and get around it, we decided that the easiest way in order to achieve some of what we were trying to do was to open up an investment account together, and we fund it together and we all benefit together. That is the goal of it. And if we can build up, I believe anyway, I think we all believe anyway, that if we can build up a portfolio substantial enough to where we are all three of us eating off of the dividends every single month, every single quarter, every year, then we have initially achieved what it was that we were trying to achieve in the first place, without having to buy any real estate, and we just sit back and we collect. So right now, starting off with $500, which is, as you said, what we invested before. Great starting point. And you'll be surprised, if y'all want to start this with your friends, if you want to start this with people people you trust. It's got to be people you trust.
That's a fact.
Yeah, I implore anybody who wants to try this group economics thing to try it out, man, because we got to $500 pretty quickly, and
With very little effort.
Very little effort. You'd be surprised how far and how quickly you can build with three people all investing the same amount. And one of the things we said too, I don't want to take up the whole stage, but one of the things that we said when we started investing was that there wasn't going to be a finite amount. 1 week it might be this much. One week it might be $10. Next week it might be $25. 1 week it might be $100. Who knows? It's basically all up to what everybody can afford. Nobody's putting in more than the other person. Everybody's putting in the same amount. So that's very important to us as well. The goal is we just all consistently and steadily invest so that we can build up something and have that hopefully get to the point to where all we got to do is sit back and collect money. So I think it's something that anybody with a group of friends that they trust can buy into. And so we're going to look and see where this goes. And we're getting back on the horse. It's been a long time.
Been 4 years. So just as a brief little synopsis of our account, we're investing in realty income, which is O here. We are pretty much breaking even in that. Yeah, we're down like 18 cents. We have PSEC, which is another REIT. Is O a REIT?
Absolutely.
Okay, right. Okay. And then PSEC is another REIT which had a really high dividend yield, which was what attracted a lot of investors. Mm-hmm. Me personally, I had my own individual investment into PSEC, and PSEC made me kind of a lot of money. At one point in time, I had a lot of that in my M1 account. This was years ago. I liquidated all of that because they ended up falling a little bit.
A lot of it.
A lot of it. I got right out. I got out right in time. We have iClean, which is an ETF, which is about clean energy all over the world. Mm-hmm. What are we sitting at there? We're up actually 9%. Not much, but whatever. Coca-Cola, we got. How do we see how many shares? Two shares.
Yeah.
2 shares of that. In that column. Yep, I see it. 2 shares. We're up a little bit. We got 3 shares of that. Not bad. SPHD,
phenomenal.
Yeah, they are. Yeah, they are.
They're like that little brother that don't nobody really pay attention to, but they've been holding steady. Not only holding steady, but they've been progressing.
Ford has been one of those.
Yes, they're a staple.
Ford been one of those investments that I've been able to lean on as an investor since way back, probably 2019, 2018 or whatever. And they, like you said, they don't really waver too much. There was a point in time they did fall a little bit, but they bounced back kind of quick. SPHD, which is another ETF. Are those SPHD? It's just the S&P, but it's like different versions of it or something, where it'd be different, a different collective of stocks.
Yeah, it's what it really is it's an S&P 500 high dividend, low volatility ETF. So basically what they do is they invest in a basket of stocks that has low volatility, meaning that your exposure to downwinds or turbulent times in the market and in the economy is you don't have that much exposure to. So the idea is that you don't lose as much money as you would, being invested into something else, because it's supposed to be investing in low volatility companies. And then the S&P 500, you all know, some of you, or most of you know, most of the investors know the S&P 500 is the top 500 companies in the world. So you're supposed to be getting the best of both worlds. That's the idea of SPHD, and it pays a monthly dividend.
A high dividend. Yep. And then the last thing we have is this AT&T, which is killing our asses.
Yeah, AT&T is our worst investment by far.
It is
It wasn't
destroying our
always like that,
asses.
though. I don't think. Look
No,
at the
it
history
wasn't.
of that. Yeah, I'm about to say.
Yeah, but mind you all, that we started this 4 years ago when we were all a lot less knowledgeable about the stock market and about ebbs and flows, and about how you can absolutely get ruined by particular companies. So 4 years is a long time. And the knowledge that we've gained, I feel like in between then is so much
absolutely
so much more than what we knew before. So the investments going forward will look a lot different than this shit that we got in our portfolio now.
Edward said we need to dump AT&T ASAP.
Yeah, who you telling?
Yeah, I can't wait till we can get out of that shit. But we kind of, unfortunately, we're in the red right now. Sorry, I didn't mean to do that. We're in the red right now, so we kind of got to ride this out until we find some sort of even ground, I guess.
Mm-hmm.
But what are you guys interested in investing in today? We're all going to throw what, $50 in today? We all ready for that commitment? I am.
Yeah.
What y'all interested in? Derek, I definitely want to hear what you got to say, Derek. What's up, Brazil? What'd you say?
I definitely would throw something into some crypto since we had none of that.
Oh, that's what one thing I was going to ask. What is WeBull's crypto? What do they have? Is that a separate app?
Yeah, so they separated the two. Before you could buy crypto with the WeBull app outright, but they separated them for whatever reason. I don't know whether they thought or they felt like they were getting negative feedback from some of their customers or whatever, investors or whatnot. But they separated it. So the WeBull crypto app that they use is called give me 1 second here.
WeBull Cash, I think you said.
I believe it's called WeBull Pay.
WeBull Pay. Okay.
Yeah, it's called WeBull Pay, and that is the app that you would use to invest in any type of crypto.
I don't think I like the fact that they separated it.
I didn't at first. I did because I didn't understand the reasoning behind it. I guess I don't mind it, but it is a little bit inconvenient to have to go to each one to check, your stocks and what your balances is on either the crypto or the stock market. So, I mean, I don't know why they did it. I never looked into why. I never researched it, so I don't know why. If anybody out there wants to, hop in the comments.
Will we have to make a new account, or the same account would suffice?
The same account would suffice. They would just you would just have to put in your credentials from whatever your WeBull account is into the WeBull Pay.
Look, you can see right there.
Yeah.
The quick. Let's see if it'll. So it'll open up the other app to connect you.
Yeah.
Okay.
Yeah, we can figure that stuff out later. But investing in crypto right now, I wouldn't even invest in crypto right now if I was us, just because crypto is so high. It's literally at an all-time high, nearly everything. I would actually wait for a pullback, what they call a pullback, which is basically when crypto takes a hit and it dives and you see a lot of sell-offs in the market. To me, that's the time to invest, but right now we're seeing some of the all-time highs of certainly Bitcoin. Doge is back back at one of its all-time highs. It's been averaging or staying around 40 cents. I don't think that this will hold going into the new year. I think that at some point, February, maybe May, crypto does see a pullback, and I think that will be the time to strike and go ahead and invest in some crypto. But right now at an all-time high, I don't know. I feel kind of on a little wary about it.
Like we'll be getting in on the tail end of that.
Yeah. tail end of a high. And I would much rather focus on some of the things some of the stocks that have been beaten down over the year and get in at those.
That's cool. I definitely understand.
Yeah.
So what you thinking about starting off new? What's some of your top thoughts of putting into? Got anything you feeling good about or?
Yeah, there's a couple of ideas that I have. A lot of them are in the REIT sector, just because the REIT sector has been beaten down for the later half of this year. So
Mm,
I would look into investing in some REITs. We got a couple out there that have that perform on a monthly basis still, and some that are outside of PSEC, which is a terrible, terrible stock right now. But Stag is one. STAG, Stag Industrial, and SPHD as well which is the the one we just talked about. Low volatility, high dividend. I'm cool with that as well. I think both of those are good investments. They're both monthly paying dividends as well, which is important, I think, and trying to build up early. And they're both at good prices right now, to me, in my opinion.
okay.
So those two, and then if you wanted to go into another sector, I will look at Energy Transfer, which is not a it is not a monthly paying dividend stock. However, I believe that the growth of the company is headed in a great direction. So Energy Transfer, Stag, and SPHD, those are some of the ones that I was looking at.
Ojo, you got any ideas?
There's a lot of talking about. I haven't really looked into it really hard, but a lot of people are saying I do take in advice from a lot of different randomness, but I definitely try to investigate myself because word of mouth can definitely pay off. But this whole new AI concept is coming into play. Is here.
Microsoft is the leader of that.
These
People don't
stocks
know
are
that.
here, and it's going to start moving fast and taking on fast before we know it. So I think we need to find a lot of that, not necessarily a lot of those, but a few of those, and anything that goes along with that world, be it semiconductors or chip type, or I would even say, you saying energy sector, solar, I think is going to be solar, and those type of fields I think are going to be very big, as well as like lithium. Anybody like lithium mining or anything like that, I think those type are going to be huge from now on, because
We need it.
it's going to be a shift, a major shift. We're at the beginning of the shift, but there's not enough players in it yet. But I think there's going to be a major shift to lithium. Lithium is the best battery product available at the moment. It holds its charge from the first pull to the last pull, and then it's just dead. That's the concept of what they're saying lithium does, as opposed to a regular alkaline or whatever material battery. It dies down, is mountaintop. Lithium is on, off. Regular battery, nickel cad, all of those, that is a peak, it's a mountaintop, then it's going to taper. So I understand that concept. And then especially with everybody trying to put a push towards electrical vehicles.
Yeah.
That part.
The EV market.
Yes.
So the only thing that I'm really interested in as an investor lately, I'm dividend crazed. I'm a dividend whore. So I don't know. I was going to ask you, Derek, on an update about your opinions on. I'm leaning on you, nigga, because you're the one that, you be in them trenches deeply. I'm poor, so I don't be in them investment streets no more. But JEPQ, Those are my babies. I still hold those to this very day. I value those over even my own crypto, which might have been a fucking mistake, but I did. But I like the fact that I get paid every month from something that I bought, and that's the first time I could ever say that in my life. I'm interested in that. Like he said, I'm very interested in AI, the development of that, and of course, I mean, obviously, we're headed to depending on that as a society a lot. So when I think about that, I think about Microsoft. I read this thing that said that Microsoft is sort of like quietly, everybody thinks about Tesla or OpenAI, but Microsoft has a large stake in OpenAI.
They do.
And I didn't know that until very recently. Um, so just to boil it down, I love dividends. I love the idea of AI. Um, and I was going to ask you those two questions. What is your opinion on the Microsoft stock single? I know you don't really buy single stocks anymore. I remember we had that conversation.
I do. I do still. I just don't do it as frequently as I buy my dividend stocks, but I do still. I have stocks that I try to dollar cost average into. But Microsoft is one of the leaders in AI, and not a lot of people know that because, like you guys are saying, when you think about AI, they don't think of it for whatever reason, which is weird to me. They don't consider Microsoft as one of the leaders and innovators of this shit in this space. I think people go to Apple immediately. They go to Tesla because of the self-drivable vehicles or whatnot. So they go to those more so than they would go to Microsoft, which people still largely consider just to be a computer company, but there's so much more than that.
Way more.
So Microsoft to me is a great investment. It's a buy and hold long term for me. They have done nothing but increase their dividends. I think they just increased it maybe twice within the past year or so. So Microsoft, I'm down with. I think that's a great investment. I have no objections to that one. And
bring it up. What they trading at? Bring it up if you can.
Yeah.
You have to forgive me, but I don't fucking know how to search on here. I'm assuming it's out here. What's Microsoft? I can't remember. There's MSFT.
Yeah.
So they're at $400. What?
Yeah. Yeah.
Oh shit.
So the tech industry has been blowing up. When Nvidia took off and took flight, it lifted. They say the rising tide lifts all boats, and that's exactly what happened in the tech market. So everybody benefited from the tech boom, which we experienced within the last year. Microsoft, Tesla, Apple, Meta, all of those, Nvidia, the opponent or opposite to Nvidia, which is AMD, all of those experienced a crazy run up in price. So, but I think it's tapered down because I'm looking at the charts now.
Yeah, I see.
So it's tapered down from where
it's the 1 year.
Yeah.
And so it look like it's kind of evening out. Do you think it's going to plummet?
I don't think it's going to plummet. We may see more of a pullback going into the early year, but I think that right now I would still buy it and hold it because I
would think so too.
I think Microsoft is going to be, they'll be around for the foreseeable future. And I always ask myself this question. I was talking to my wife earlier and she was asking me, we were talking about stocks. And I told her, I said, the one thing that I always ask myself before I purchase a stock is, if I'm on the fence about it, whether or not to buy it, I just ask myself a simple question. Do I see the company and the stock being worth more in the future than whatever it is today? And if the answer is yes, you got your answer. So it's really simple when you think about it. I mean, you can go into all the fundamentals and technicals after that, after you answer that question, but I think Microsoft is a great starting investment for us to get back on this horse.
Okay, so two questions. Well, not questions, but we need to figure out two things. We need to figure out how many stocks we're going to buy, obviously, and how much we're going to put into it, obviously. Because I don't want to spread ourselves too thin.
No, I don't either. I do believe in diversification, but you can't over diversify.
Yeah, I agree.
I wouldn't be opposed to putting the whole 150 into Microsoft. I wouldn't be. No, if y'all want to split it up and do half into Microsoft or split it up into thirds and do, maybe 50 into Microsoft and 50 into two other stocks.
Yeah.
I'm open to whatever.
I was thinking thirds or even breaking one of those 50s up into halves to get maybe 4 positions in something.
Okay.
So my vote is Microsoft or Jeppy, and I'm interested in both of those. Ojo, what was your leading?
I'll go with the Microsoft. I'm for that. I'm unfamiliar with Jeppy.
Uh, let me throw one more in there too. I want to cut you off, but let me throw one more in there. SCHD. SCHD is an ETF that is tech led. It's tech based. So SCHD has it's an ETF and it basically leads in the tech. So it has all of the
Look at that chart.
Yeah, and it has all of the top. That's why it's been going crazy.
Ooh, yeah, I'm with that one. I want it.
Yeah, SCHD is one of my favorites in my dividend portfolio.
That's a consistent right there.
I want that
consistent climb right there.
Yeah, I want that.
Very, very little dips.
Yeah, let me give everybody, for those that may be unaware, I'm gonna just rattle off the top 10 of what they're invested in. So you got Cisco Systems,
security.
You got the Home Depot, you have BlackRock Inc., which is everybody knows is probably the biggest
that's Skynet
organization. Yeah, basically, yeah. You got Chevron, which is oil and gas. You got Verizon, you've got Texas Instruments, you've got Altria Group, which is another monster out there in terms
Texas
of
Instruments. They're into hospital sector as well. A lot of people might remember Texas Instrument as that calculator.
Yeah.
Was coming.
Yes,
the scientific calculator.
The scientifically specific, yeah. But they deal with a lot of hospital equipment as well.
Mm-hmm.
I didn't know that.
Yeah,
I had no idea. So I'm with SCHD. Microsoft is it's an individual stock, but I'm in with that too. You mentioned something about, what was it, the REIT that you mentioned, Derek? The first one that you said?
Stag.
I was gonna say stank. Yeah, Stag.
Yeah,
I'm with real estate. I love all the stuff you just named for this STHD. Their top 10. I literally, this phone that we're looking at on the screen is Verizon. So I fucked with some of their, a lot of their investments. So so I would say we could pick four. Let's pick 3 or 4 positions. That's my vote.
I got this one semiconductor that's doing pretty good.
Call it out.
Huh?
Call it out.
I'm trying to think of the name of it.
So Derek, when you get a second, cash at me to 50, and I'm about to try to figure out exactly how to transfer that money in there.
It was QQQ. That's what I'm thinking of. That was the tech. That was the more of a tech ETF. QQQ. I made a mistake, y'all. So QQQ is the one that's heavily tech based. I still have a lot. Like SCHD is like my number 2 position in my dividend portfolio, so I believe heavily in it. But QQQ, if anyone wants to go heavily into the tech sector right now, and you want an ETF that kind of covers the gamut, QQQ is the one for that. Their top holdings are Apple, Nvidia, Microsoft, Amazon, Meta, Broadcom, Tesla, and Netflix and Google.
I'm with it. I'm with that.
Monsters. Those are all monsters.
Yeah. Yep.
I'm with that.
That's QQQ. So we can pick up some of that. Definitely. I would nominate that one along with Microsoft.
I'm an ETF guy, so
yeah,
nigga, we could do QQQ and SCHD today. I don't give a fuck. Microsoft was in there anyway, so we are investing in Microsoft.
Yeah, if you invest in QQQ and you're investing in Microsoft.
So and then you said Stag
Industrial is one. That's the monthly paying dividend one that's been pretty sturdy. It has done me well in my dividend portfolio, and I believe it's a great company.
Let's do Stag, SCHD, and QQQ then.
Okay,
I'm about it. I'm about that life.
So you want to split it up in 3s? Let me cash up you that money.
How the fuck do you make it? How do you bring money into this motherfucker
though? You're on the WeBull app, right?
Yeah.
See what I mean? See what I mean about their interface?
It's so ugly and it's so bulky.
It's so inefficient to me. So you can click on the middle button,
Yeah.
You click on the middle button. You got to input the
Transfers.
password and to go to transfers. Yeah, that's
Okay.
it.
I see it
So I'm
now.
gonna cash app you the money now.
Oh, and another thing, I just saw a guy tell. I think I saved the clip on how to get into how to invest in SpaceX, because I think Elon, he's with his boy Trump. I think everything Elon is touching is just finna skyrocket, and SpaceX and what they're doing.
I am about to pull this money. I don't know what their process is if they give you the instant buying power the way that Robinhood does. All right, this is the Gods Invest episode 1 still, but we had to basically cut the last episode short and we had to continue. You just jumped ahead about 10 days or something like that. We went through I went through hell personally trying to get my investment onto WeBull only to find out. I mean, I'm sorry, what is this? It's WeBull.
Weeble. Yes,
Yes,
Weeble.
Webull. Only to find out that Webull does not have the same feature that Robinhood has, where they give you the instant buying power. So we went through all that talking and stuff to make the investment, only to have to wait literally 7 days for it to come through. And then we've been busy, so here we are. Currently, we're reviewing all of our options. This list that you see before you are the ones that we're considering, from SCHD, SPHD, TSM, QQQ, VOO, JEPI, STAG, Microsoft, which I forget the ticker symbol. Is it MSFT?
Yep,
I
that's
think it's
it. MS.
MSFT.
Yeah.
Yep, you got
And
it
then
right.
Energy Transfer, which is ET. And then what did you say was your alternative to QQQ?
QQA.
Well,
What did you say? My
well, I
bad.
have it pulled up, so I wanna kind of get into it just a little bit. Because I actually have a comparison chart. So I wanted to ask y'all while we're here. I wanted us to take a look at it just so you can see, to get y'all opinions on it, on the difference. But the alternative to QQQ is SPYI. So it's QQQ, and then there's SPYI. So
Got it.
those two are the ones that I want us to kind of choose between. And both of those are tech sector oriented, heavy in tech.
So we have about 10 options here. And we have about, where are we at? There we go. We got about 178 bucks, 179 bucks to play with. Oh, and another thing I wanted to go over in this video is Ojo said that he don't think we should have drip on for all of these. So
If you can do that, because I know on Robinhood, I think once you turn it on, not on Robinhood, I think on Cash App, once it's on, it's on. Not drip. Yeah, drip. The automatic yeah.
reinvestment. Yeah, we
I
could
don't think
turn
you
it
can
off.
do it for
You could turn it off.
on Robinhood for each individual stock.
Not Robinhood. I'm
I
talking
mean,
about
not Robin on Cash App.
Yeah, because I'm the one that turned these on. They asked me, and I just turned them on because I'm like,
Oh,
you know, they were just sitting. The money was just sitting, not doing anything. So I just
no, you
figured
talking
I'd turn.
about for this. I'm talking about for Cash App. I don't know if you can do that. I was just saying.
Oh,
I think you just turn it on.
Oh
I
yeah, I
could be
don't know if you
wrong.
can. I don't know about Cash App, but
yeah, I don't know
here
either.
we can do it individually, because you can see the little
Okay.
sign next to
Yeah, I
in
seen it.
yellow right there where it says drip.
Mhm.
So you can turn it on individually or not.
So I wonder how you change that. Drip reinvestment value.
You might have to go to the settings or something like that somewhere. But which ones would y'all not want to drip back into itself?
Probably this AT&T. I'm assuming, right?
Yep,
don't
that's
know.
the one for sure. Unless y'all want to try to, because I don't know, what are we down in AT&T right now?
We are down 37%.
Let me pull up the stock price for AT&T. Because what are those dividends looking like? If you get a chance, can you pull up the last dividend that we got from AT&T?
AT&T is at $22.92. This is from Robinhood though.
Yep, I got 20 something similar, 22.83. So some around the same price, hovering around 22.90, $23.
Mhm.
And we are down 37%, you said. So so the question is, do y'all want to have those dividends drip back into it to buy cheaper shares and kind of dollar cost average down? Or do y'all want to just, because I
What's
mean we
going?
could.
What's the education? What's the educated? You know, do you have any knowledge on what's going on with AT&T? Why are they so fucked up right now?
Well, they were behind everybody else when it came to transferring their, I guess, their technology,
All the
over to
4G,
the
5G, all that kind of shit.
exactly.
Yeah.
Yeah, they were one of the last ones on the totem pole to get, and then historically, I believe their service has just not been up to par with
Up to
everyone
par.
else's. So, and then I think they took a hit when I know they did that merger.
Direct TV or
Yeah, I think it
one
was
of them people's.
DirecTV. Yeah,
Yeah.
and that
And
did
Short
that.
Direct, one of them two.
Yep, and that deal didn't work out for them because that we're not on that anymore.
Yeah,
Satellites are
satellite, they damn near obsolete. They're
they null
using
and
the
void.
same
Yeah,
technology as fucking Comcast now.
yep. So they took that merger, but you you kind of they played chicken, and they kind of got hit with a lot of backwind from that bad deal because we don't even deal with that anymore. We don't deal in satellite anymore. So that's what you got that's going on with the company. So it's like, do I see it being delisted? No, but would I invest any more into them? No, but that's why I'm asking y'all. Would you like for the dividend to kind of dollar cost average down on its own without us having to invest any more into it, or do y'all just want to say fuck it and basically cut our losses with it?
So what I'm trying to figure out is, do they even have a dividend? Because how do I see the dividends payout? Turn
It's
that
saying on
TV down.
Robinhood is saying, well, WeBull got that weird account. On Robinhood is saying they got a 4.86% dividend yield.
Yeah, they got a dividend. It should have been right there. But see,
Yeah, with our last.
Webull's interface is so terrible that
That's why I went to Robinhood, so it's easy checks.
yeah.
It should have told you what our last dividend payment was from them. How many shares do we have?
We have 2 shares.
So 2 shares, if it's at 4%, and what's the price?
22
22. So what we getting?
22.86.
What we getting for?
We bought it when it was at 37, 35,
Ooh.
37 and 35. Those prices at the bottom there.
Sheesh.
Yeah, see.
I don't know what we can even be getting from them. 80 cent? Or no, not 80. 4% on. I don't know what cost do you get it at you getting it at the price now cost of $22, right?
Probably.
Yeah.
Yes.
So we got about 40.
Yes.
Our
It'll
value, our
definitely.
market value is about $45. You said 4%?
4.8, almost 5% is what the dividend yield is.
So it'd be like $2.25 for the year. Is that what that means?
How do they pay? How's
They
they
probably
dividend 1 year or quad or
pay quarterly. Let me see. Let me see if I can pull it up right quickly.
I would think probably quarterly as well. Matter of fact, I could have just looked on mine, but I don't think I have AT&T. Yeah, I don't have AT&T personally.
Let's pull it up on stock analysis. So the dividend is paid out quarterly, and you are right. That is a 4.86% on here, which the last dividend cash amount that was paid out was 0.2775. So yeah, around 28 cents per share is what we're getting. So it's not a lot. That ain't nothing, So
Not a lot.
So we
Do
could
we
definitely just take those dividends out,
put them in something else?
and just let it build into the cash balance, and then we'll allocate it somewhere else.
I'm not opposed to buying. I'm not opposed. Either way. I can go because I don't think AT&T. What I've heard with AT&T, I haven't even heard this. I don't want to say I heard it. AT&T, it's a lot of companies doing it, but AT&T are kind of going with the government as well as Comcast, and they're doing a lot of low income free cable, free
Yeah.
internet to people.
Yeah.
Because I don't know for sure, but I think AT&T was one of the first to start that to help people with that as far as big name companies. Let me see if I can even look that.
Here it is. Here, I found it. So our AT&T is active, and we can unenroll any one of them. Now, what I don't see is how we get what has been our dividend history. Period. So profit loss gainers P&L calendar dividends. Here we go. All right. So AT&T. The last dividend we got was on November 4th for 56 cents. It's not bad. So, like I said, we get about a little over $2 a year.
Yeah.
Almost $2 and what's that? $2.24 a year.
Mm-hmm.
So, I don't have a problem with keeping that in there. Y'all want to cancel it? Is that what the consensus is? It's three of us, so two
I mean,
against
I don't
one,
mind.
whatever.
You can let it drip back into itself. Lower
What
our
you think,
cost
Ojo?
basis over time.
Either way, I'm on the fence because I don't see them being down, but they just down now.
We're getting 45 cents, something like that, from Ford every 3 months. Coca-Cola, we got $1. Wow. We're getting about $1 every 3 months, $4 a year. Not bad. Okay, then. We got about $20 in dividends in the last few years. Not bad. So, all right, let's go back to the list. We got about $178 to play with. And we got to make, what, we're going to buy 2 or 3 or 3 or 4 positions? Did we ever decide that?
I think we said 3 or 4, just 3 or 4 positions, which, I mean, it's 3 of us. We put in what, 50 a piece. Let's just keep it at 3 positions for this go round. I think that should suffice.
Almost $60 per one, or you want to split it evenly, or what?
Yeah, I mean, yeah, I'm cool with splitting it evenly into whatever we decide. Yeah.
What's
Sounds good to me.
178? Hold on, where we at? 178, 70. What was it? I think it was 178.78. Yeah, 178.78 divided by 3. About $59.60. $59.59.
Yeah, it doesn't say who was the first, but
59.59. So I'm really interested in SCHD and SPHD. I'm really interested in JEPI. I love JEPI to death, but I also love VOO. I don't know anything about SPYI or QQQ, to be honest. I just don't know.
Mm-hmm.
Stag. I mean, Microsoft is cool, but I would rather have an ETF that is tech based, and I think that was SPHD.
No, as the tech based one was QQQ. But let me here, I'm gonna share it now. Share my screen so I can bring up the comparison charts, and I'll wait till Ojo comes back so we can see this as well.
okay.
So can y'all see that?
You gotta add it to the stage. There it is.
I thought I did. Okay. Y'all can see it now though?
Yep.
All right. So what you're looking at is I'm on ETF.com for anybody wondering. ETF.com is a free site. You can punch in whatever ETFs you want to and put them. The site basically queues them up and it goes head to head. Now, there's paid versions of this as well, but Come on now, I'm not paying no money for this. So I was able to I
Not if
was
you ain't
able to
got
get
to.
this. Not if you ain't got to, right? So I compared QQQ versus SPYI, and let's get down
Hey, this
to
is
it.
dope. This is fire, bro.
So when you see, this is a very cool tool, bro. Very, very cool tool for anybody looking to compare. So here's the differences between the two. Y'all remember QQQ was up there. It's sitting around $535 per share right now. SPY is sitting at $52.50 per share. Now, when you go down to their number of holdings, QQQ it's the top 100. They deal with the NASDAQ 100 index, meaning the top 100 companies, right? So it says 102, but it's the top 100 that they focus on for this ETF. Meanwhile, you can see for SPYI, they've got about 500 companies in theirs, which obviously opens you up to a little bit more volatility, right? Because you're exposed to more companies. However, before we get too far off, let me drop all the way down.
What?
Here are their top 10 holdings right here, side by side. They're almost identical. If you look at the top 10, Nvidia, Meta, Apple, Alphabet, Google, Microsoft, they both have Amazon, they both have Broadcom. So it's literally the same. It's almost the same, a mirror image
It's just
of the
allocated
stocks they
differently.
have. It's just allocated differently. And you can see Berkshire and Costco being the main differences on this top 10 list right here. But it's like you said, they're allocated differently, but they're both still very, very tech heavy. So the cheaper option obviously is SPYI. However, if you come up here and look at the growth performance right here, you can see that QQQ has outperformed SPYI. However,
Wait
one
a
more
second. Was
thing.
Microsoft in those?
Yes. Yep.
Okay, all right.
Microsoft is in both. Microsoft is in both. Is right there. So 6 point, little
They got
over
about
6%.
8% in
About
that
8.
QQQ.
Yep.
That's what I was about to say. The percentage in which they invest in is damn near close as well comparatively to they in 500. They got 500
Yeah.
options. They got 100, but they
Mhm.
still in their top stocks. It seems like they're still neck and neck as far as their investments
Yep.
percentages.
And you'll see QQQ has had more growth, significantly more growth than SPYI. But you also have to remember that, it's significantly, they're dealing with the top 100 companies versus SPYI. You're exposed to about 400 more companies than you are, the other one. And the last thing I want to show y'all with SPYI is over on stockanalysis.com.
Before you switch over, what's their dividends looking like? Does it show that
I
here?
can show you right here.
Okay.
So the dividends is what I wanted to show y'all for SPYI. This is the big difference. The dividend for QQQ is 0.58%, I believe. Okay.
Mhm.
The dividend for the SPYI, are they gonna let me open? Oh, here it is 11.59%, and it's paid out monthly. So this is a monthly dividend for SPYI, and it's sitting at 11.59%. Those are the big differences between these two.
Wait. QQQ was what percentage?
0.58%.
What's the payout? Monthly as well?
No, not monthly. It's quarterly.
Oh,
Quarterly
shit.
payout for QQQ at 0.58% versus 11.59%, and it pays out monthly for SPYI. So that is the difference. That's why a lot of people choose SPYI, because obviously that monthly dividend is a little bit more attractive,
Yeah,
or a lot bit more attractive than the QQQ, and it's a lot cheaper. It's $52 versus paying $500+ for
one
QQQ.
share. Right.
Yeah.
That definitely hits different.
So
you might have just flipped my mind. I'm on the other side now. SPY, nigga.
Hey, bring up this one I just found, QQA. In that same comparison with SPY. Yeah.
Income Advantage ETF.
Yeah.
Okay. Let's go to the overview first. Overview is here. Let's see what they've done over the past year. Okay.
Ain't nothing
Nice.
changing on the main screen.
Nice. Oh, is nothing changing?
No, it's still on the same.
Okay, hold on. Yeah. Wait a second then. Let's do this.
Thanks.
All right. So, can you see it now?
No, it's nothing.
Nothing. Still.
Got it.
It
Got
seems
it.
like it's
Got it.
pumping up now. There you go.
Okay. All right.
No,
So
that's okay. Yeah, there we go.
So Invesco QQQQ or QQQ right here. Y'all can see that green line over the past year. They up 5.24%. Their holdings. Let's see what's inside of this thing. This is their holdings list. We're gonna go through the top 10. You've got Invesco government agency portfolio. Never heard of that. They've got Apple, Microsoft, Nvidia, Broadcom, Amazon, Tesla, Meta, Google, Costco. That's in the top 10. And then right at 11, y'all can see Google, Netflix. And if you keep going, you see all the popular ones like Pepsi, AMD is there, Lind, Adobe, Qualcomm. Yep. So it's along the same lines as those.
Can you bring up
How
that
many
growth
holdings?
chart? Yeah, that's what
How
I was
many
about to say.
holdings?
Can it go to that same growth chart comparison?
Let's see if I can go back and I'll have to bring it up on a different screen. Give me 1 second.
Okay.
So is this QQA?
Yeah.
Right? QQA ETF versus the SPYI ETF. Let's see what we got. It didn't change to QQA. It's still QQQ. I wonder why. I wonder, is it
So it says, yeah, that's per share. That's expensive. I wonder, is this just a subsidiary of them?
I think it is.
This is within them.
It might be. Yeah, it's an Invesco deal. You know, Invesco is a big multi-layered management company, so they got a bunch of different ETFs out there. So this might be something that's
because when I came across this, there was a lot of different QQQs.
Yeah, yep. So this is probably something within their fund specifically.
But when I read, they were saying this pays better, and you see the stock price.
You mean like a stock appreciation, or are you talking about dividends when you say pay?
Dividend, if I'm not mistaken. Matter of fact, let me see if I could bring.
Click that history tab right quick. Is that a chart?
Yes.
QQA.
Can you see it?
Yes, sir.
QQA pays.
Oh, this is brand new.
Yeah, they got 122 holdings. Came out July 17th of 24.
Yeah.
They playing. They got a 30-day dividend yield at 8.82%.
You said 8%?
8.82 30-day year dividend yield.
QQA.
Yep.
Right here it says the dividend yield is 3.29%. And they say it pays out monthly.
I don't know what this is saying then. What this is in this is in reference to. So for one share, it would have been paying $1.71 per share. That's what that is at the top right there.
No, I believe that's for the year.
Oh, okay.
I believe for the year, that's what one share will get you for the year.
Okay.
So $1.71 per share per year.
Because
it says down here that the cash amount last paid out was for about 45 cents.
But that can't be right if they pay monthly.
You're right. That's not right. So
yes, it is.
No, it can't. If you paying out monthly,
45%
a month.
Yeah, monthly.
Right.
Because in 2 months, that's $1.
Oh, a month.
Yeah,
oh,
per month.
Okay.
Per month.
I got you. Okay. So
yeah.
you're saying per month, that'll be about what?
Shit, that's damn near
$5.40,
right.
$5.50 a year per share.
Yep.
Yeah, look at that. You see that at the top in that print?
Yeah, it says QQ.
Yield of
it has
3.29 and
dividends
pay $1.71
per
a
share
share in the past
But
year.
it's only counted year to date though, because it's only been out for 4 months.
Oh, is that what's going on? Wait,
Yeah,
hold
it's
on.
only
Oh, yeah,
started in
that's why.
July.
Okay, yeah, all right, that's why. Okay,
So
so
that
it's,
is
this
it.
this is
45 cents
brand
up.
new.
That's 45 cents a month.
It's brand new.
Okay,
So it's only paid out that amount so far.
yeah, okay, yeah, that makes sense.
So
I'm
what y'all
still
think
trying
about that
to.
one?
I'm still trying to find out like what's the difference. Like what is this their version of SPYI? This is what it looks like.
Can you look at SBYI in the same holdings? I want to see. I mean, not holdings, but their history of dividends and all
That
that.
comparison with that graph chart and that pie chart
I don't even need
like
a
in the last
comparison.
one?
I just want to look at the dividends tab and the
Holdings.
history tab of the SPY. Not even the holdings.
Okay.
Dividends and history.
Here's the dividends for
So they done paid
SPYI.
out $6 this year per share.
Annual dividend. Yep, $6 per share. You can see the dividend yield sitting at 11.59%. Pays out monthly, and then you can see if you drop down all the way here, you can see the chart. It's up and down, but it's still gradually climbing.
It's gradually climbing.
Which
and
is what
it's
you want to
new.
see.
It's
And,
new. And look how much it's climbed since. So
and their inception looks like they were back in September of 2022. So they're about a couple years old, 2 years old.
No, that
I
graph
said
said 10
24.
years.
Hold on. It said
Go-
been
No.
out for 10 years.
Let's go back. Let's see. Let's look at the max chart.
Inception date is July 17th of 24.
Oh, wow. Oh, okay. I see. 22, Ojo.
22. Inception date, August
maybe it only
30th.
been on here on Robinhood that long.
Yeah, August 30th of 2022.
Okay.
So
I'm with
it's been on.
SPYI because it's paying more.
Yeah, I got a little bit more.
Paying more than
history.
that?
Yeah, it's paying more than the QQA.
What was the difference in payout?
It's only a couple, about maybe what, 60 cents or something like that.
30, 40, 50 cents. Yeah, something like that.
Okay.
Let me see how many holdings.
I mean, but they're very similar though in their holdings and their growth and everything. And their price.
QQA has 122 holdings versus the 500 holdings that SPYI has.
Oh yeah. I forgot about that. 500.
A lot more exposure.
What's the
from
price
those other
per
companies?
Share?
Price difference per share.
QQA is 52 and SPYI is about 55.
Is
52.
52.50
Oh, 52
versus
Damn.
52.05. So it doesn't matter to me. I'm good with either.
I vote for SPYI.
I'm fine. We can do SPY. I just came across QQQ other day and just threw some money in it real quick.
So
the fact that it was new, the fact that it was new, up and coming, and like you said, it's like it's a spinoff of all of those other QQQs. Seemed like it had a little promise, but I'm down.
We can always spin back. I'm cool with either one of them, but they both very similar.
Yeah, we can nail down SPYI as the first one, first investment. That's cool. So we got one. Now we just got to choose two more.
I want one of the SCHD, SPHD ones. If it's up to y'all, though. I mean, obviously, I'm going to defer to the group, but I'm interested in those two. And I think,
go ahead.
I think SCHD is what type of holdings do they have?
Can y'all see my screen still?
Yep.
Yeah.
Okay. So I'm gonna go over to their holdings.
BlackRock first.
BlackRock, Cisco Systems, the Home Depot at number 3, Bristol Myers Squibb Company with number 4, Chevron at number 5, Verizon at number 6, Texas Instruments at 7, Altria Group, great company, at number 8, UPS at number 9, Pfizer at 10, and then below that you can see they have all of the other AbbVie,
Pepsi,
great company, Pepsi, Coca-Cola, Lockheed Martin, Amgen.
Kimberly Clark down there.
Now this is SPHD, or this is SCHD.
This is SCHD.
So what does SPHD have?
SPHD is, I believe I know for a fact they pay out their dividends monthly. Well, let's go over and see. So their holdings are number
Almost
one.
double the price.
They are almost double the price. Yep, that's true. So number one, Altria Group. You got Kinder Morgan at number 2, Bristol Myers at 3, AT&T at number
Woo.
4.
No,
How
that's
many
not a
shares
good
they got?
sign.
They got 4 million shares of AT&T. That look like their biggest. If
That's one of
that's
their
in their
biggest.
top, that's
That's
their
in their
biggest.
top 4. It's the top 4.
So
Number 4.
that's
Fourth
their
biggest
biggest holding.
position
It
for them.
seemed like there.
Biggest.
No,
It's
the
the fourth
biggest is
biggest
Altria.
position. Yeah, the biggest is Altria. You looking at you looking at share numbers. So I get
Right.
but in terms of
Value.
value and how much money they're pumping into these, they pump more money into Altria at number 1. But still, that's a big position for them to have at number 4.
Right. That's the only reason why I say that, because AT&T took that big dive.
Yeah,
They got that many shares in it, and they putting this much in it comparatively. So that you know.
Yep. But they do
I
pay
used to
out.
invest in Kinder Morgan as well. I think, what is that? A oil company or something? Energy company?
They
Kinder
said the
Morgan.
dividends is down 10%.
What's Kinder Morgan?
Kinder Morgan operates as
Yeah,
an energy infrastructure company. Yep. Natural gas.
Yes, sir. I used to invest in them because they had a
So
pretty decent dividend.
Did it say their dividend was down 10% growth? Right there. Scroll
uh,
down a little bit more.
no.
You see it right there? You see that right
dividend
there?
growth negative 10%.
Oh, right here. Yeah. But I don't know when that time. I don't know what timeline they're using.
Okay.
That must be maybe overall. I don't know. Let me drop down to the chart and see. So this is the chart here. Yeah, you can see it kind of growing, but it's kind of stagnant. They jumped
why
up
they
to
took that
25
hit?
cents
Jesus.
in 2016, and then ended up dropping right back down in
Right back down.
2017.
They ain't had no time in that.
They do pay out monthly though, so that's what a lot of people get attracted to with this one.
But
What's
look
the
at what it
monthly
says
payout?
there.
Say that again. Which one of you?
The annual dividend ain't nothing but $1.68.
$1.68. That
Mhm.
ain't.
Yeah, because that dividend yield is only 3.42%. So
do me a favor, hit the back button and go back to SCHD when you get a chance. I just want to see comparatively.
Yep.
That's still SP. There we go. Hit the dividend. And then, that's even less. But their growth is higher, I guess.
Their growth is good.
Well,
They was at the negative 10.
Well, that's the difference between the two of these mainly. Is SPHD is focused on the dividends because you get that monthly payout. SCHD is focused on growth. So this is a growth ETF. So a lot of the companies that you see that's in the top holdings, they're companies that have been around. They got a wide moat. You see, the Home Depot, BlackRock, all these big, huge companies, Chevron.
Right.
They're focused on, growth and having you invested in companies that are just, well known and been around for ages that you can count on.
Damn,
so that's the big difference between the two.
51 million shares of Bristol Myers.
Bristol Myers.
Jesus. What's their growth over the last year?
Bristol Myers?
This as a whole, this SPCD.
Oh, just SCHD?
Yeah. SCHD.
Last year, they're up 10%.
Up 10%. Okay.
Year to date,
last year.
they're up 10%. Let's go to the last 5 years. They're up 44%.
Oh, okay. We was looking at the day.
Yeah, you were looking at the day chart.
Oh,
Yeah,
okay. Got you. All right. I don't know. So we got SPYI.
If y'all trying to do bread, and we focus on high dividend.
Look at Jeppy.
Look at Jeppy. I'm not really in y'all top.
Look at Jeppy right quick so we can see.
What was you about to say?
Here's JP Morgan. Right here. Let's go to their holdings.
Oh, I gotta get this charger.
Top 10 holdings. You see Amazon at number 1. Now at number 2. I'm not familiar with that company.
Neither am I.
Meta Platforms at 3. Train Technologies, not familiar with them either.
Train, nothing runs like a train. That's lawnmower equipment.
Oh, is that what that is?
That's outdoors, yeah, if I'm not mistaken.
Then you got PGR, the Progressive Corporation, at number 5. You got MasterCard at number 6, Google at number 7, Microsoft at number 8, Nvidia at number 9, and Visa at number 10. So, and then you can see Honeywell, Southern Company, AbbVie, ADI.
They got Pepsi.
Yep.
McDonald's.
Pepsi, McDonald's, Lowe's, Lind. There's Lind again, great company. Comcast Corporation.
Ross.
They got young brands in here. Wow.
Damn, they got
Y'all
some.
know
Of
what
everything.
Ross is?
Ross is that's the
It's like Marshall's. It's like a bargain basement store.
Yeah.
But they just got one here. It's over
So
there
it's
by
like
my daughter's school over off Telegraph.
So it's like a Burlington Coat Factory, basically.
Yes.
It's like,
and people,
Okay.
but they're higher end, if I'm not mistaken.
Okay.
But they still have those, and women be flocking to them. That
Procter
store
and
stay
Gamble.
packed.
What's up with this right here?
a bunch of hidden secret investments.
Yeah. So, I mean, I love Jeppy too. I have Jeppy in my personal dividend portfolio. So
I think
don't have
that's
a
my
problem with
biggest
Jeppy.
investment right now.
What's your payout? What's the dividend payout?
Dividend is 7.19% with an annual dividend of about $4.25 per share.
It's not bad at all. I got about
yearly,
monthly. They pay out
right now.
Okay, I see it.
Right now, they give me about $4 a month.
Yeah,
$5, $6 a month.
They pay out monthly.
At what what's the price?
So around the others, about around $50, so it moved up $60 a share almost.
Jeppy.
59.
I want some.
About myself.
I want some Jeppy, big dog.
Thanks.
The MasterCard and the Visa are really what grabs my attention because I always tell people to invest in debt.
Oh yeah, any kind of debt holding.
Yeah, invest in people's debt.
Because they always bought that life, over living, overextending.
Yep. So that's always going to be a win, or as long as there's humans.
So is that a resounding unanimous yes for this or no?
I'm down for it.
I'm cool with Jeppy. Yeah.
Let's get her some gavels.
Okay, so
gavel it up.
that would be dope though. I fucks with that idea.
All forward.
JP Morgan. So JEPI, what was the other one? SPYI.
SPYI.
Yeah. So what's going to be our third? I don't know nothing about VOO. I kind of forgot about VOO. And is STAG an ETF as well?
No, STAG isn't an ETF. STAG is it's a monthly paying dividend stock as well, but it's an industrials company basically.
Is VOO a REIT? We might need some real estate.
VOO is just the top. It's the top 500 companies in the world. I think, not in the world. I think in the U.S.
Okay.
So VOO is just an ETF with the 500 biggest companies, most productive companies, and if you fall short of that list, they kick you off and they replace you with whoever's right behind you.
That's so bad.
It says we are a REIT focused.
It's a REIT focused on the acquisition, ownership, and operation of industrial properties throughout the United States. Our platform is designed to identify properties for acquisition that offer relative value across tier 1 industrial real estate markets, industries, and tenants through the principal application of our proprietary risk assessment model. Provide growth through sophisticated industrial operation and attractive opportunity set. So if you're looking for a REIT, here. Let's go to their
$35.
Where's their inception date? I don't see it here on this list.
Let me look it up right quick.
Last 5 years, they're up 15.85%. Max, they're up 194%. Let's go to their dividends. So their dividends is 4.18%.
STAG is April 15, 2011.
Okay, 2011. So they've been around a while. About what's that? 13 years?
Almost 14, yeah.
Yeah, 13, 14 years. And their annual dividend so their dividend isn't like, it's not huge, it's not gonna, but 4.18 is a solid dividend. And what I really like about STAG is that they're just proven. They have proven, they're proven, and y'all saw the growth
Let's see
in
the
the
chart again.
overview. Here's the max chart, up 194% since inception.
What was the price at
So they doubled. They damn near doubled.
what was the initial offering? IPO.
IPO.
I'm just curious. It's about $12.
$12.70, somewhere around
So,
there. Yep.
so in about 14 years, they've tripled,
Tripled their valuation.
200% almost.
Yep. And it's a monthly paying dividend stock as well. On top of that, so you're getting the best of both worlds. Well, not the best, but you're getting both worlds. You're getting some growth and you're getting that constant dividend income as well. So it's just something for y'all to consider. We could drop down here to their chart. You can see that dividend chart. It's just done nothing but grow.
So hold on,
dividend.
I'm gonna switch to this again right quick. And so hold on, let me so we're gonna do Jeppy, SPYI, and Stag is a real strong one for me, but what are these other options? We already looked at QQQ. What's TSM again? That's the semiconductor.
That's that semiconductor. Yeah, let's check that out.
All right,
TSM, Taiwan Semiconductor Manufacturing Company, huh? So is this foreign then?
It might be a little bit.
yeah.
Yes.
Taiwan, China.
Yes, it is.
Oh, it says Europe, Middle East, and Africa, and Japan. Oh, and the United States. Okay.
Yeah. It provides a range of wafer fabrication processes, including process. All right. So
what's the price?
Website. I can't tell.
$200.
All right.
I got in.
Let me take a look at their financials for a second. I just want to.
I got in at 77.20.
Oh, you got in at a wonderful price. But I do want to see that balance sheet. Where's the cash flow at?
4 years ago.
That's separate. So here.
Wow. I got one share. I haven't bought anything else.
So you're up major, right? Should be.
I like.
Free cash flow is positive, so that's a good thing. Free cash flow is king. They're not over leveraged. Huh. Let's look at their net debt. Total debt repaid. So they've been paying down that debt. All right. That's a strong one. Even though I feel a way about
it's foreign.
About foreign companies, about investing in foreign companies. But that's just from my experience dealing with fucking Alibaba's stupid ass. But here it says the 4 analysts with 12-month price forecast. They say the average target price of this of this stock is $228.75 per share, and they're saying the low estimate is 200 and the high estimate of 250. That's what they're expecting, and they're saying right now they think it's a strong buy. Let's go to the dividends. Dividend yield is 1.38%. Annual dividend, that's $2.78 per share per year, and then it looks like they've been consistently growing that dividend. Let me see. Oh, whoa! What happened here? Oh, they dropped off right before during the pandemic.
Pandemic scare. Probably everybody got that spike.
Yeah, because that's June of 2019. They had a hell of a spike though. Goddamn. Yeah. And they still haven't climbed back up.
Still haven't recovered. But if you look at, so what was their highest?
And this is their growth.
What was
their highest looks like it was $1.31 per share.
And now what it say they paying out $1?
And now it's at around
almost 70 cents.
Yeah, almost 70 cents per
share. I
share.
thought it was something different at the top.
Right, yeah. Right.
Well, that's a yearly though. He talking about
at the
top.
Oh, you talking about right here?
278.
Yes. That's the annual dividend per share.
Okay.
So you're getting about 70 cents per share every 3 months.
Yeah.
So if in my eyes, like I said, I had them since 2000. I only got one little measly share, but you see what it's done since, and I can only see it getting back and going because anything semiconductors, anything like we were saying earlier before. It's
the MAC chart is crazy. They've been around since 1998,
Oh wow.
1997. And you see the max chart percentage, they're up almost damn near 2,000% since inception.
Hey, go to the hit the 1 year chart.
1 year, they're up 95%.
Oh my God.
Yeah. So they were a part of that big boom that we saw in the tech industry. Anything semiconductor related just took off.
Now, do you think that are we buying too late?
I wouldn't think so.
We might be at the tippy top of the tippy tay right now. But I mean, like he just said, I'm expecting the semiconductor market to do nothing but just increase. Now,
Continue.
Even if it's slowly.
Even if it's slowly, yeah.
And
You're definitely not going to see. We definitely missed out on the bulk of this growth for sure. You're not going to see 2,000% in the next, 10 years. I don't think. But
I think that dividend to get back up there. Look at where we coming in at that dividend comparatively.
Steady growth. I would love to see a pullback and then get in, but I mean, it's the same thing. If you're investing in this, or if you're investing in NVIDIA or any of the other tech companies, you shouldn't have a problem investing in this because it's along the same lines as the rest of them. So, I don't have a problem throwing some money in this. So this is another strong one for me, strong contender for me.
So so our options so far is TSM and Stag. I'm crossing SPHD and SCHD off the list for now. QQQ, I'm not interested in. Microsoft, I'm good with having the.
Within somebody.
Yeah,
and
I'm
not
good
as
with
dolo.
that. And then energy transfers, what you mentioned. Can we look at that as one final thing?
Yep.
And make a decision after that.
Look at ET Phone Home. So right now, sitting at $18.64 per share. Let's go straight to the max chart. Up almost 10%. The date of inception looks like it was somewhere around 2018, October 2018, somewhere.
What kind of company is this? You said, what is it called?
It's a pipeline country. So natural gas, facilities, all that stuff, transportation of natural gas. Right here, it also sells natural gas to electric utilities, independent power plants, local distribution, other marketing companies. So yeah, heavy on industrial.
Okay.
Let's look at the dividend. The dividend is 6.93%. So that's $1.29 per share. Per year.
Per year.
Yep. And
they're cheap though. So
they are cheap. So, it's another thing to consider. Right now, last payout was about 32 cents per share.
If we was to drop a third of our investment fund right now on it, we would have 3 shares off top. So we talking about $4 a year off of this shit.
Yeah, and something that I consider will be strong. Gas ain't going nowhere as much as they try to get rid of it. It's not going anywhere.
A lot of UPS, a lot of those carrier trucks, they use LP trucks. They don't use. They're not gas anymore. They're propane or they're natural gas.
You can see the dividend chart here. They had that drop off back during the pandemic,
everybody pandemic.
However,
they got back with niggas though.
They got back. They back quick. Yeah, they did. They got back. And last year, at the beginning of last year. So,
okay, wait, let me look at this one more time. I'm sorry. So,
let's go to the forecast for 1 second.
TSM, Stag, and ET.
They say 8 analysts say it's a strong buy. Average target of $20.38 on average, they say, with a high estimate of $23 per share. So what
was that peak high? What was that little? Can you click on that little peak high that they already had?
This one?
That little, yeah.
$19.86.
1986. Okay.
Close to 20 at one point.
So they talking about moderate growth, basically.
And that was back
minimal growth.
Yep. So you're getting growth, you're getting the dividend, you're getting the growth, and you're getting a sector of the market that isn't going anywhere for the foreseeable future, and
I
it's at a
wonder.
moderate price of like he said, you drop a third of our investment on this, you picking up 3 shares. So
I wonder, can we find this within somebody else as opposed to, you know what I'm saying? Getting that
I
solely.
I don't know. I don't know if energy transfer is in another ETF.
Because, like Chevron is one of them when there was with in a lot of them other ETFs and what's the other
I'm
company?
thinking it might not be in an ETF in another ETF because it's still so new. You got to remember this is just the inception is it's been around for maybe 6 years.
Okay, you're right.
So,
ETFs are mostly top 100s.
Exactly. They're going to go the ETFs for you to even make it on the ETF list. You got to have some
Proven.
you got to be proven and you got to have some years behind you.
Okay, you're right.
I want to make it clear to the audience that I don't even know if we said this in the first video, but I know in the first video, the first time we invested years ago, 6 years ago, whenever we started this fund, I think I can speak for all of us, all of our strategies were different when it comes to investing. We were doing a lot of individual stocks. I think all of us were, but now, me personally, my strategy has been more ETF based. I probably learned a lot of that from Derek,
Same.
but it was just upon him telling me that, of course, I went and did my own research because I don't just invest blindly. So I was looking at ETFs, and it's just they're all kind of like because you're
Crazy. Follow me blindly.
because they spread their money across so many investments, the
Yeah.
So
growth,
many winners.
so many winners too, right? Proven winners. And they got the capital to just pour millions of dollars, billions of dollars into this stuff. The volatility is kind of lower than an individual stock, not kind of, way lower.
Absolutely lower. And that's the
And
point of it too.
you get the best of all worlds. Like
Yeah.
you get to invest in everything at once. So,
Yeah.
that's why we're looking at all these ETFs. That's why I'm so interested in, even though energy transfer is a single, I think TSM is a single as well, but still,
Yeah.
you know, this is I love ETFs though. It gives you so much, like it's like perfect for the long game
Yes.
because they have long-term growth versus like a spurt for
Yep.
1 year. Yeah.
Yeah.
So TSM, Stag, and energy transfers are options. Ojo, what you thinking, bro?
I'm for it.
Which one though? Out of those three?
I like the Jeppy. That's what you said. Hold on. What you say? Without them last three? Say it one more time. I'm sorry.
It's the TSM. It's all the ones with the words next to them. Semiconductor, the Stag Greek, and the ET natural gas.
Which one out of those three?
Yeah, for our third choice.
Mm.
I'm personally interested in getting into a little bit of real estate. I like real estate. I think that's something that ain't never going nowhere. And usually when companies get a bunch of land or units, they not letting them bitches go ever.
They have taken hits. If you
They have.
only thing I would say about real REITs, right now it seems like you have a lot of people reducing their store count. They're consolidating because they're going more computers. They're going away from cashiers or whatever. If we just talked about Walmart, Meijer, Home Depot, Costco, they're going away from cashiers. That means they're lowering their overhead as far as employees, and they're replacing to people who can work 365, 25 hours a day, a computer.
Well, yeah,
So,
but that's why the type of real estate that you're investing in matters too. Because it's a difference from investing in a company that is dealing with real estate that is catering to oil companies. You about to move your oil company tomorrow? No, nigga, you're not. You're not about to pack this up like it's a Walmart. You know what I'm saying?
Right.
So versus a company that's dealing with storefront property, you know, a company
Right.
that, you know, has CVS or some shit, Walgreens, and you know, we see a lot of those closing every single year.
Closing.
Yeah,
Yep.
you're right.
So
All of
it
those little
depends on the
retail shops are kind
yeah.
of closing
So
up right
yep.
now.
So it
Everybody's
depends on the type.
downgrading.
I was
Yeah.
thinking more so like domicile, but I don't know what Stag invests in. A Stag is like commercial real estate.
Domicile, I would think, will be even worse.
Yeah, Stag is industrial, so it always
Oh.
think it's just industrial. So oil, gas companies, that a lot of their properties, a lot of these companies' properties are owned by Stag.
So once they find a property, they there for the next 50 years, probably. At
Minimum,
minimum.
minimum,
Right.
yeah, minimum. So that's
Because
another reason that I like Stag is because the type of real estate that they have. You know, like I was saying, you're not about to pack your shit up and find another
okay.
place to deal oil and gas. You know.
Right.
Okay.
I like it. I like it.
So I'm good, dog. This is a stalemate here because I love energy transfer.
I like both too. I mean, if
I
y'all
like
want, we can
Stag.
split it up. We can split the last one up into, you know, split.
Hold
We
on.
ain't gotta. This ain't no
Can we
rules.
can we bring the price per share of what we got and what we can we put numbers up? What our overall investment number is that we had to invest, and then price per share on what we're investing.
Well, I think you said 178.78, right?
So hold on, let me look real quick. So energy transfer is currently at 1864. And then Derek, what's Stag at? Can you go back and look it up?
Stag is at 35.38.
38.
And what's something else I could type it in
TSM.
real quick.
TSM.
TSM is at $200 a share.
Yeah.
$200.66.
Oh, I got 201.26.
All right, so those are the prices there. You said 201 what?
26. That's what I got from Robinhood, but per share.
All right, so we're looking at so when we split that 178.78 by 3, you get almost $60. So if we want to split the last $60, we can get $60 into SPYI, $60 into JEPI, and that last 60 we can split half and half, Stag and ET. And then
Stag is at 35, and then okay, I see what you did. I see the numbers.
WeBull will let you get partial shares?
Fractionals.
I believe so, yes. Yeah.
Yeah.
Yep.
Yeah, I think I just did it with my dividends.
Yep. They finally caught up to the rest of the world. Because I know for the longest time
they didn't for a long time, right?
Yeah.
All right, so let me look up Stag right quick. $35.38. Yep, right on the money. So if I was to buy, of course these buys they're not going to go in until tomorrow morning.
Mm-hmm.
So you want to put in a maybe a price buy, the limit buy in for a separate. If it bops a little lower, y'all just want to buy flat out whatever it hit.
No, just buy flat out. We don't have to be that because these are long-term investments anyway. So it's not like we're about to be jumping in and out of them. So flat price in and let it do whatever it do. Whatever it buys it at, it buys it at.
Oh, what is this? Oh, there it is. All right. So that's Stag. What was the other one?
ET.
All right. So you want me to put in the order for JEPI?
We still doing. I'm about to say, what about JEPI and everybody else?
So I'm gonna buy right now. We could do market order.
So we doing one share of that. Just put it as a share price. So we might have a little bit of change left over. Or we putting like a flat amount into it.
I would say just do it evenly.
Do it even?
Yep, just do a flat number. Like if we putting in, $58 and put in $58 or $59 and $59.
Well, that's the share right there, $59.22.
Well, the only reason why I say that is because we might have some change left over after, you know what I'm saying, all our investments. If we putting in by just one share, price might open, it might change, might be, you know, whatever. That's why I was saying it like that, as opposed to putting in a flat price, $60 worth.
So I'm about to buy this. $9:30 in the morning. I don't want to do no motherfucking questionnaire. What?
Disclaimer.
What are they talking about? Can y'all see this?
I can.
That's new.
That is new.
Y'all
Do you
want to
use my?
How the fuck are they asking you for to complete a questionnaire?
Let
See,
me
this is the
pause
shit
this
that
shit.
we're talking about.
Let me pause this shit. I don't think so. I don't think that's what it is. I think it's because I was doing a market order. So if I do a limit buy, I think they'll let me.
So they want to know, nigga, what kind
So
of
we're not
trade
even
you
gonna be
are.
able to make this fucking order until the morning.
Why?
I fucking hate WeBull so motherfucking much. Do you hear me?
Robinhood do the same thing, no? You can't purchase doing the
You could put the order in and it'll
Yeah,
just
you can put your
execute it
order in.
tomorrow.
Oh,
and
you can't even do that. That's what you're saying.
No,
You can't even.
they won't let
Damn.
me do it until tomorrow. What the fuck, bro?
That's crazy. Why wouldn't you? Why wouldn't you just take my money now?
That's
Maybe
fine.
that's good.
See, that's why, and that's another reason dealing with fucking WeBull that we need to just put a dollar amount on this shit, and no one share here, one share there. Nope, let's just put a dollar amount on it. What we got to spend, and then go from there. So if we got $178.
That'll make it easier. If
Yeah.
that'll make it easier and go through right now, do it.
No, it ain't gonna do it still.
Oh,
Wow.
Yeah.
y'all want to get out of
I damn near want to pull this money out of this bitch.
How
I
we
hate
gonna go?
fucking. I don't know. That's about to ask your ass.
Who has the biggest
you-
amount of
You could do there's a couple different ones out there. We could do public. I have a that's my that's where I invest my dividends. You could do public, or we could do what's the other stupid ass one? Moo. Either of those. I don't think any of us have.
which one of those has the biggest amount of types of investments you can do? Because I know you can't invest everything in Robinhood. Robinhood don't deal with everything. WeBull don't deal with some stuff. Cash App don't deal with some stuff. You know what I mean?
Yeah. But I don't know. I don't know the answer to that. I don't know which one of the ones. I don't know who has what, who don't got what. I mean, I know it's true what you're saying because I've dealt with it before, run up against it. But in terms of who got what, I don't know. We will have to find out through the process of investing, I guess.
Maybe we could just buy this shit on here tomorrow morning, and then the next time we do an investment, maybe we open up a public account.
I was to say, Derek, are they giving out free shares?
I don't think so.
Don't nobody.
Everybody stop doing that shit.
No,
Mumu does it. Mumu gives out free shares, but I don't even have an account with Mumu. So
well, it could be Mumu. Let's get something free for them using our money.
Well, we have to get somebody. We have to have some type of code from somebody to plug in the Mumu.
A reference.
Yeah, a reference.
It ain't nothing off rip.
I don't know.
Sometimes they give you something off rip. Let me see.
Well, I'll make the investments in the morning, but we got our order in. We're gonna do 2/3 into Jeppy and what was it?
1/3 into Jeppy, 1/3 into SPYI, and then the last one you could just throw it into either ET or
I was gonna split it. I thought split it
or
between
you can
Stag and ET.
Yeah, split it evenly then. Split it evenly between Stag and ET, and that's it. That's the investment right there.
Say let I'll do it in the morning. I guess we could wrap. It don't matter. We can
let's wrap up.
So
and then let's explain what happened really quickly. So as we were saying before, WeBull is such a trash ass interface for investments that we just literally ran into a problem trying to complete the investment. You know, some of y'all or a lot of you know that with Robinhood, you can go on there right now, put in an order for right now, and it will execute by morning. You can do the same thing with Cash App as well.
Too. Yeah.
But for whatever reason, WeBull, I know it's because it's foreign. WeBull is a foreign fucking company. Yeah, WeBull is there. I think it's owned by the Chinese or something like that, if I'm not mistaken. But yeah, that's why it's so quirky. That's one of the reasons why it's so quirky.
What the fuck?
Yeah. So WeBull is, I've always hated their interface from day one. That's why I rarely like to deal with them. And we just ran into another problem, which is yet another reason. And we're thinking about, all that leads to me to say that we're thinking about switching over to another platform for our investment. We'll decide between now and then, and we'll keep you all updated as we go. But pretty much the consensus was at the end of this, we're going to split our investment up, that $178.78 that you all saw. We're going to split it up. 1/3 of it will go into Jeppy. 1/3 will go into SPYI, and then the rest of the remaining balance will be split up into halves, which we'll put into ET Energy Transfer, and the other one will be Stag Industrial. So that's the investment going forward. I think we picked some really solid choices tonight. 4 different stocks, damn near 4 different sectors, cornering, you know, various markets, various sectors of the market. I think we got some solid plays starting out here, and I think going forward, man, this is going to be, I think this is going to grow into something amazing. So I'm looking forward to it. I'm looking forward to the growth, and I'm looking forward to all of us being paid.
I can't wait till we got 10 racks in this mug.
Yeah. 20. I want 50.
20,
I want
50. Yeah.
Something where we can start actually eating off of this. And so but this group economics, you know, we're about to show y'all what the strength of group economics can do. And you know, it's only up from here. So if y'all got some like-minded friends that y'all want to start this shit with, man, please do. By all means, please do.
Friends that you trust.
Yeah, we're not saying it's perfect. We're not saying it's going to be perfect. We're not saying our investments are going to be amazing. You know, we are all novice investors compared to some of the other people out here who have years and years of experience.
Right.
But that's why I think this is important, because we represent the majority is why I think it's important. We represent the majority of people who don't really, you know, we just out here trying to figure it out. We got a couple ideas. We know a little bit about a little bit, or a little bit about a lot of it, and we piecing it together. But listen, at the end of the day, we're gonna make some solid investments, and we're gonna make some money. So thank y'all for tuning in. You know, hope y'all enjoy it, and I'm looking forward to the next episode of this. Hopefully we can get this in weekly, make this a weekly thing. And I appreciate y'all for stopping by. If you check this out, go ahead, click that like, subscribe. We ain't going nowhere.
Facts. Factamundo. Holla.